All right, so iron condors, they're also made out to be this set it and forget it way to rake it in with options. But is that really all there is to it? I'm not so sure.
Yeah, you got to look beyond the hype, right? We're going to dig into the nuts and bolts of iron condors, how they actually work, what the data says, and what the pros really think.
And we've got a ton of resources to pull from for this deep dive. We're talking Reddit forums, breakdowns from Tasty Live, even insights from those big-name traders like Trading 5 Talents and Option Alpha.
We're aiming to give you the complete picture of iron condors, so you can figure out for yourself if they're right for you.
Love it. All right, so let's not assume anything here. What exactly is an iron condor?
Basically, it's an option strategy where you're selling both calls and puts all in the same date, but at these different price points, creating this range.
Right.
You're betting that the price of whatever you're trading will stay within that range.
So it's like you're betting on a basketball game and you think it'll be close. Neither team's going to totally dominate, so you're playing both sides a bit.
Yeah, I like that analogy. But just like sports betting, there's always that risk, right? Even though iron condors have what's called defined risk, the most you can lose, you can still lose.
Which reminds me of that pennies in front of a steamroller thing people on Reddit were saying. They're worried about those small profits compared to the potential losses.
And it's a valid concern. You're making money selling those options, but if the market suddenly jumps against you, those gains can disappear fast.
And speaking of Reddit, people are also talking about the difficulty of finding the right opportunity. High volatility seems risky, but then low volatility means those potential profits are tiny.
It's definitely a balancing act. And then there's those commission fees to think about, which can take a bite out of your profits, especially since iron condors use multiple options contracts.
And we can't forget about those crazy, unpredictable market crashes, the black swan events that nobody sees coming.
That's when risk management is super important. We'll get into specific techniques, but the takeaway is that with iron condors, you gotta be ready to adjust and manage your trades actively.
So we've covered the basics, some potential downsides, but now let's see what the data says. We found this Tasty Live episode, backtesting iron condors in SPX. They looked at how these things performed over time.
Backtesting is key, right? It takes us from what if to this is what happened. Do iron condors actually hold up in the real world?
And the results were pretty interesting. They found that the iron condors, with those further out of the money options, what they call 16 delta iron condors, they won more often.
But there's a trade-off. Those 16 delta ones, they had lower average profits compared to those with options closer to the actual stock price, the 40 delta ones.
So it's that classic dilemma. Do you play it safe for smaller wins or take on more risk for a chance at a bigger payout?
Exactly. And that's where those management strategies come in. KC Live found that taking profits early, say at 50% of the max,